Good evening, everybody. Sorry for being late. The darn computer has been goofing up all day long. I have to reboot a few times. So we've been getting a lot of questions on our training session that's coming up this Saturday, which is eliminating your emotions using candlestick signals, which is, if you've heard me in the past, being the worst investor in the world, I soon discovered that it's because our emotions usually are backwards as far as making decisions in our trading. And that is self-evident. I don't know if that's the right word, but that is evident in the graphics that the Japanese race traders started revealing or identifying, that investor sentiment usually is completely backwards. So that's where using the candlestick signals and patterns allow you to anticipate when things are changing at levels that normally we would expect our own emotions to say, oh, get me out of this trade. Now we turn it around 180 degrees, say that's what the normal emotions of most people are. That's where we start, instead of selling, we should be looking to start buying. So, what your hike said is pretty good. Yeah. So anyways, this is what we're going to be concentrating on, eliminating the fears when taking profits. Now, through the years, we have done surveys to see what people's biggest faux or biggest fears are. And here's a fear of them. Fear of entering trade, fear of taking profits, fear of taking profits too soon, bad results of human nature, which is changing our trade strategy during a trade, where most people have problems closing out a losing trade because of emotions. This is where setting stops help us, and trying to get rid of the fear of setting stops because they're afraid they're going to come down and pick you off. A lot of people let the intraday chart start influencing their trading decisions, and a lot of people don't stay with the plan. So we're going to take a quick look at taking profits, because that's where a lot of people have problems. And this is based upon the graphics of candlesticks being what is normal as far as human nature. Greed and fear. The fear of looking stupid, taking profits too early, which means we're not taking profits when the charts are telling us it's now time to take profits. Or the fear of closing out. This was always my biggest fear, of closing out a winning trade. Was, boy, would I look stupid if I took profits and this turned right around and headed up higher. Well, now we have a way to offset that, so that we take profits when it's time to take profits, and we get back into a trade when it's time to get back into a trade, based upon just some of the simple candlestick pattern setups, like the J-hook pattern, that type of thing. Fear of not getting bigger profits, meaning when there's big profits already made, what kicks in? The greed. So there's very simple ways to know when to come out of a big profit trade. And what causes the fear of closing out a trade? As everybody says, oh boy, if I close out this trade, look what I missed. I'm sitting in here hoping this was going to move, and I close it out, and then bam, it takes off. Well, we're going to go through how you alleviate that problem. So, I mean, if we know what should be done based upon what the charts are telling us, you're not going to hit every trade right, but you're going to know what to do if that signal fear of turning a winning trade into a losing trade, yes. And that can be easily explained by, before candlesticks came along, I was a stockbroker for 8 years. And it was so hard just to get into a winning trade. So what's the normal human reaction? They're in a winning trade. They may not have anything telling them it's time to sell, but boy, would they look stupid if they let that winning trade turn into a losing trade. So they close out their winning trade quickly so they don't have a losing trade. On the other hand, what happens when somebody buys a position that immediately goes south? What's their first rationale? I'm going to close out this trade as soon as it gets back up to where I bought it, which has nothing to do with what that price move is going to do. Keeps going down till they can't stand the pain anymore. They say, get me out of this trade. That's called eating like a bird and pooping like an elephant. So what we do is based upon the logic that's built into candlestick signals. If you know what the signals are telling you, you got a natural discipline that builds up just because of knowing the probability. So here's the fear of looking stupid by taking profits too early. This is where the T-line becomes an extremely valuable tool for telling you when it's time to cover a short position using the T-line and when it's time to reverse the trade. Or, with candlestick analysis, here's where the signals tell us where it's logically time to start taking profits. Now, could this turn around and blast up? It could, but we'd be able to recognize the pattern that developed. So, having the visual analysis allows us to assess the probabilities with much greater accuracy. And knowing candlestick signals, this is where in the chat room every day we get people saying, well, what told us that we were supposed to be reversing here, or what was the buy signal? Those are questions that should not even be asked. The first thing that you want to know, the ABCs of candlesticks, is the 12 major signals. Once you understand and recognize the signal itself, and the Japanese rice traders went on as far as telling you what the investor sentiment was that created those signals, that gives you a much stronger degree of experience that you get the same insights as somebody that's been trading in the markets for 50 years. The T-line is the 8 exponential moving average. How many days is the T-line? 8 exponential moving average. Yep. So here's the things that we can observe by knowing what the signals are telling us. Here's what we expect if we're looking for a pattern, J-hook pattern. It didn't confirm. So if we were taking profits in here, we could be buying back when it breaks out. But this told us, even though we haven't sold or closed below the T-line, this is the type of thing that we're going to start extrapolating a little bit or anticipating. Is even though we haven't had a close below the T-line, remember the T-line rule. You see a buy signal to close above the T-line, you can stay long until you see a sell signal to close below the T-line. Volume a little low. How about that, Sean? It might be me. Somebody knocked the microphone away from me. So we have visual aspects that tell us when to take profits and when to get back into a trade. We also have things that allow us to tell us when to get into a trade and when to get out of a trade. And that's if we see an explosive move and it's up 3, 5, 10, 15, 20, 40, 80%, you got a very simple criteria. You just go to your 10-minute chart and see when it's time to sell. Remember that caveat to our T-line. This is the 10-minute chart on a chart that looks like this. Do we buy here? Do we buy here? Do we buy here? Do we sell here? Do we sell here? Basically, you use the same criteria. You see a candlestick buy signal, there's our best friend gap up. You stay long until you see a candlestick sell signal. Well, that's a pretty hefty move. Why would we be anticipating a sell signal up here? Because of the caveat of the T-line. But the further away you move from the T-line, the higher the probability it's going to come back and test it. If I have something like this, and I don't want to wait for the full 10-minute chart, then you flip down to your 5-minute chart. Gets you out a little bit quicker. So if we've got the visuals that tell us we've moved up, we're in the overbought area, we're starting to see sell signals, but we haven't closed below the T-line, but we're having a hard time getting through this level, what's the prudent thing to do? Take your profits. What's the fear factor? Boy, this could come bounce off the T-line and take off again. Take your profits. What's the worst case scenario? We close it out here and we buy it back here knowing the pattern is confirming. A lot of people have a hard time closing out a position. I say a lot of people. I'm anticipating people have the same phobias that I used to have a hard time closing here and then buying back here. Boy, would we look stupid if that turned right around and they took more profits away from us. What percentage of long and short positions should the portfolio have? That's all based upon where you are in the markets, and we'll get to that here in a little bit. If we've got something like this, what do we know about the nature of dojis? Shows you there's indecision going on. So if we've got a nice profit coming up into here, and we're starting to see a lot of dojis, we know there's indecision. And what usually happens at indecision? That's usually a change of investor sentiment. When we're getting out here, we don't know whether we're going up, down, or sideways. Why take the risk? Take the profits, and then go find a chart that looks like this, where the probabilities are in your favor. This is the type of thing where the anticipation or the subjectivity of candlestick analysis starts going in your favor, because you can see there's been a lot of diminished bullish force, and it might be time to take profits and go to the next trade setup. So anytime I've got a profit and then I start seeing sell signals, darn. Oh, I'll have to pull that up on the live chart. Had a good example of that today in, I think it was PEC. I'll get to PEC. So I'm starting to take profits in here, because we're starting to see indecision. If I was sold here, I could always buy back here, because what type of pattern would I have? I'd have a J-hook pattern. The fact that they never broke out from here told me probably by the time this would have broken out, I may have already been in another trade and made a good profit and been able to come back to this one. Indecision in the overbought area. What's the other little, yes, I'll remember to do those on the live charts. We don't have a lot of live charts tonight just because the market's not giving us very good indications of whether to be long or short. But when they gap it up in the overbought condition, remember the Japanese race traders tell us, where do most people buy? They buy exuberantly at the top. Where do most people sell? They panic sell at the bottom. So if I see a gap up in the overbought condition, I'm starting to look to take profits because that's the exuberance. Did we get down here already? It must be going faster than I thought. All right. So here is something that I probably don't stress enough. If you see a candlestick sell signal, like a bearish engulfing signal, and a close below the T-line, I'd say everybody, the assumed hopefulness is this is just a selling day in our wonderful uptrend. But what you should be doing immediately is saying, all right, I should be becoming mentally oriented toward taking profits on my long and start looking for more short situations. There's our bearish J-hook pattern, and what was today's trading even telling us? Just very simple logic using the T-line rule. That you're in a downtrend and you see a buy signal and a close above the T-line. Your stochastics aren't quite into the oversold area. So even today, kind of put out a little warning saying, be careful. Even though this is trading positive, you want to see what this does by the end of the day because you're still in a downtrend. That's why unless they do something drastic that tells you they've changed investor sentiment, you have to assume this downtrend remains in progress. Now, with that, this is where you can start putting your common sense assumptions of what's happening in individual chart patterns. We've made very good money on Tupperware. Started taking profits up here. So here's a case, too, that a lot of people say, well, shoot, I just don't know when to take profits. We know because when we can see the probabilities start going against us, even though it might not have closed below the T-line, what's it telling us right now? We're running out of steam. How do we know that? Because we've got a doji. We haven't been able to get through this line, and there was the final nail in the coffin. So there's nothing wrong with closing out half the position and moving on to a chart that looks like this. Now, we've got a different perspective of Tupperware. Not only did we have a bearish engulfing signal that told us that the bears are taking control, now we might be setting up for a good short position because of the bearish doji sandwich setup starting. HIB, the same scenario. Look what was happening up here. Shooting star. You could see how another shooting star. What was that telling us? That every time the bulls were taking it up, the bears were starting to step in. We hadn't closed below the T-line until today, but we started getting the signs. Now, we started getting signs, too, because if you can see that an uptrending stock is starting to get some pushback by creating sell signals, and the market in general looks like this, logic says, oops, they're running out of steam. Let's go ahead and close out part of that position. Do you enter and exit on daily time frame, or do you always go to the 10-minute? No, I usually go based upon a daily chart. But that is also a function of what type of trading are you doing. Are you doing scalping? Are you doing day trading? Are you doing swing trading? I'm a swing trader with my stock positions. That means I'm going to be in those positions anywhere on an average of 2 to 10 trading days. So if I'm buying something or shorting something, it's based upon what the candlestick daily signal is telling me. Now, if I'm trading soybeans during the day, I'm going to be trading off the 10-minute chart and flipping down to the 5-minute and maybe the 1-minute chart. Does the candlestick sell signal and close below the T-line have to be the same candle? No. Just a candlestick sell signal and a close below the T-line, not necessarily on the same day. Yes, if it closes, if you have a sell signal and it's waffling around and then it eventually closes below the T line, yes, that's telling you the bears are in control. I don't know whether I've got one in here yet or not. Did we do HIB? HIB. Oh, so HIB started seeing some selling and the market was starting to sell off. Still didn't close below the T line, but it was probably time to take off at least half the position. Or you can tell yourself you got stochastics in the overbought area. It looks like they're starting to curl down. Lots of indecision. The market's trading lower. Let's close out the position and see what happens. And if we bought down here because of the slow curve breakout with a trend kicker signal, or we bought here because of a J-hook pattern, we've got profits. Let's put it in our pocket. Not because we got a sell signal and a close below the T line, because the market's heading down and we're starting to see indecision up here. We can start anticipating that there's going to be a change of investor sentiment. Same scenario with apps. Nice little breakout, looked like a J-hook pattern. But what is our most important criteria? It's what the signals are telling us. So we're starting to see indecision and flattening out. Start taking some off the table because the market's heading down and this is having a hard time heading up. And today was the final nail in the coffin with it closing below the T line. The advantage we have watching the graphics, the candlesticks, is seeing what everybody else is watching. If there's a resistance level and we know that they took it up and then failed by doing a bearish harami, yeah, they failed up here. Let's close out the position. Or once we got up here, we can pretty much say, all right, I better watch my 10-minute chart because they're trading up here at a resistance level. We're in the getting up in the overbought area. What are the probabilities? Probabilities are they're going to keep on up, or if they start fading off from here, that's because everybody's watching that resistance level. We can see a lot more quickly. Just flip into our 10-minute chart to see what investor sentiment is doing up at those levels. This is why you want to know the ABCs of candlesticks. Your 12 major signals. There's your bearish harami. There's a J-hook pattern setting up. SRNE, we were gung-ho on this one because it was doing a J-hook pattern off the 50. But what does our bearish harami tell us? The buying has stopped. What's that tell us as far as our game plan? As soon as the market was opening lower and this was trading lower today, you close it out. Because that told us we aren't heading up unless they open it positive and started immediately trading positive. We can also use that same analysis for where do these sell signals occur. That bearish harami tells me the buying has stopped. The stochastic's not quite up in the overbought area yet, but the buying has stopped. And what else do we have to kind of confirm that it's time to take some profits? Look where it occurred. This was all occurring right about the same level that it topped out before. So we have the visual capabilities of seeing what type of signals we have occurring at levels that buying or selling has happened in the past. So when I see something like this, in the old days, I would think, oh, maybe this is just profit taking. I'll hang on to it because, boy, I would sure hate to close this out and then it turn right around. Well, now I know the probabilities are pretty strong that if they open this lower the next day, close it out immediately. This is what helped me with my natural disciplines. And I say natural disciplines that we're not trading things now by hoping that it's going to do what we expect it to do because of the signal or pattern, but we can see what it's actually doing. One of the biggest percentage numbers that dramatically improved my trading was that I knew that 70% of my trades were probably going to be profitable using candlestick signals and patterns. Now that seems like a pretty good percentage that you couldn't lose very much money, or you should be making money on those percentages. However, what a lot of people disregard or don't pay attention to well enough is the 30% that they don't make money on. So I've heard so many people say, oh, most of my trades are good, but I just don't seem to be making a lot of money in my account. And I say, all right, well, what are the ones the bad ones? And they say, oh, I bought this one up here, and now it's down here. And my question to them is, why didn't you sell it at that first sell signal? So now I've got a natural discipline that if I buy something and it's not working, I don't have to take that personally. I know already that's probably one of the 30% that's not working. I can close it out and not sit there saying, boy, am I stupid, or how did I misread this? I just close out the bad trade and I go find one where the probabilities are in my favor. Got a lot of people that have a fear of entering a trade. Very simple to get around that phobia. That's the analysis paralysis syndrome. You can develop a very simple plan when putting on a trade. And the plan isn't something where you sit and you calculate. It's something you look at visually. You can see when it's time to buy, what is the expectation of that trade, and where do you put a stop? That trade tells us it's not working. Now, are there trades that open up? This is one of the fear that a lot of people mention also. I'm afraid that when I buy it and it's trading positive, that it's going to turn right around and go the other way. What can I do about that? The answer is we know that probably 1/3 of your trades might do that. So you don't keep from not getting into a good trade because of your fear that you might get into a bad trade. The game plan is very easy. If you're buying based upon the expectation of the results coming out of that signal or pattern. And you can visually see where should this not be trading if it trades positive. That would tell me this trade isn't working. Now you've already set up all your parameters of that trade, and you don't have to sit there and be fearful about putting on the trade. You know what to expect once that trade goes on. We can use the candlestick truisms to improve our profitabilities. And this is, again, eliminating the fears. My biggest fear always was if I was lucky enough before candlesticks came along to have a bullish trade, then I didn't know when to come out of it. And I didn't want to come out of it because, boy, what would happen if this was the Dell of my lifetime, or if this was an Apple computer of my lifetime. And I bought it for 10 and sold it for 13, and it went on to 240. Boy, would I look stupid. Now we can get around all that by knowing what each signal and pattern is going to tell us. So this is, we've got, before we go to live charts, we are doing a full day training on, 2 days from now. And, darn, I meant to get the link. I can't get it. Hold on for 1 second, see if I can get the darn link. There it is. So what this session does, it takes all the information that we have built into candlestick analysis and kind of, hones the analysis of knowing what to expect based upon what the candlestick signals and patterns are telling us. But that's only kind of a part of the battle, or like Yogi Berra said, 90% of investing is half mental. Not only do you want to recognize and participate in the good trades, you also want to know what to do to keep your emotions out of goofing up that trade. We'll get a lot of people, I'll go to different charts here to explain all this. I trade only directional options. Can I successfully trade entry and exits on a daily chart for swing trades? Definitely. Greg, that's all candlesticks are, is directional. Somebody was even asking today in the options room, can we trade the non-directional strategies like triangles or straddles or the iron condor using candlesticks? The answer is yes, if you want to identify which prices are not moving or moving sideways. But because candlesticks is the analysis of when there's a change of investor sentiment and applying some very simple confirming indicators like the T-line, it definitely shows you how long or when to stay in that new direction. Yeah, definitely. I trade options. All my option trades are based upon knowing which direction a price is going to move, and also kind of expecting what the magnitude of the move is. So there's a bunch of signals and patterns that are not only telling you there's a change of investor sentiment and a change of direction, but there's about 15 that are combinations of signals and patterns, which we call top rank signals and patterns, that tell you not only has there been a change of direction, but a very strong change of investor sentiment, like the best friend signal, which is your doji followed by a gap up. Sometimes I hear you say that stochastics, when they are in overbought condition, are good. Other times, yes, if you're buying a signal, you want to have your signals occurring in the oversold area. If you're buying a pattern breakout, the pattern breakout is usually going to occur when your stochastics are in the overbought area. I'll try to pull up some live charts. You use the 5-minute or 15-minute. You can use, Diego, you can use any combination you want. Just use a combination that you can kind of, correlate with each other. But if you see your 15-minute chart setting up, go to your 5-minute chart and see if that 5-minute chart is continuing to confirm your 15-minute chart. My biggest problem, I look at charts on a daily and I use a 1 and 15-minute to get into trades as a good price and set my stop, and intraday spikes stop me out. I get stopped out of DDM 2 times today when the price spiked down below and stopped me out when the price went higher. We'll pull that up. You sell even if there is no sell signal and 2 of the indexes are down. I sell based upon, let's see. Yes, okay. Becky put in the link. We usually advertise this as a 4-hour training session. You'll be lucky if it's any less than 5.5 hours. So you bring your coffee and donuts and okay. Let me do this. Hold on. Yeah, your sandwich. Let me bring up the live charts. So the reason we do put so much emphasis on the emotions part of it is because when I was learning candlesticks, it was just me, there was nobody out there to confer with, I kept saying, man, these are really good. I mean, it just puts me in good positions. But I should be making a heck of a lot more money than I'm making. What's going on here? And then I realized that I was making decisions based upon my emotions a lot more than what I should have. So everything I have set up, from setting up your trade management, meaning your portfolio or your position size, or the amount of options against your stock positions. I think this should be almost the same, Jim. Hold on. Yeah, Steve, I'm redoing stuff here. Tell me when you're ready, Jim. When the market is trending down like recently, is it best to not enter long trades even if they're good charts? Peter, go with the probabilities. As I put in the YouTube video tonight, basically go with the flow. Because if there's something going up, I was saying that there's going to be stocks that go up in a down market. But the stocks that are going down in a down market are probably going to do so with a lot more force. So I try to go with where the probabilities are going to be greatly in my favor. The link in the email does not work. It takes me to the page that says 394 for non-members, 149. When I click on add to cart, it charges me. Well, yeah, that's one of our tricks. FT, just email Abraham, or I think we put the link in every day into the chat room. Just tomorrow I'll put it in the chat room again for the members price. Okay, so if you've got this going on, where you can see you're in a downtrend, now you're in a conundrum. There's probably still stocks that you could be shorting, but you're now getting to the oversold area. The likely target is probably moving down to the 200-day moving average. So there's some more downside. Would I be shorting at this point? Probably not. Or it better have a very compelling short chart. The NASDAQ might not have very much more downside. It might be hitting a support level. But as you can see, this is where the advantage comes from the graphics. There was buying here. There was buying here, selling. There was buying here. Even on days when the market is down, like a couple of days ago, you could see there was buying after they opened it. This day was down, but you could see they were buying. So that gives you a completely different perspective of what the nature of the selling is, or what the downtrend is. It's not a dramatically powerful downtrend. So that's where you can be making your decisions that if you see the market is heading down and you see strong selling, like in Boeing, you want to be adding to your short or adding short positions. We recommended BTAI as a short. A while back, we recommended Home as a short because of that big kicker signal, and it's never closed back up above the T-line. So that's one very simple trading strategy that you can use is you stay short until you see a buy signal and a close back up above the T line. So there was a spinning top failure at the 50, followed by a gap down close below the T line. You could be shorting on this day. First target right here. Second target is probably the top bottom of this trend channel. All we're doing is putting our funds into positions where the probabilities based upon the direction of the market and the sell signals in individual stocks just add to the probabilities that we're heading in the right direction at the right time. So today, everybody was running after PEC. And so here was a stock that went from 3.75, hit 14.30 during the day. Do you buy this and when do you sell it? Well, this is where I use the 10-minute chart. There it is there. You could be buying here. You could be buying here. You could be buying here. For some reason, this doesn't. That's because it's the 5-minute chart. That's why. So here's the 10-minute chart. I was wondering why it was. Here's a very simple rule. I guess they had stopped this out. But look at the 10-minute chart. It's got the same parameters on the 10-minute chart as it does on a daily, weekly, monthly, or a 1-minute chart. You could be buying here, could be buying here, could be buying here, and then look what's happening here. You're starting to move away from the T line. They're gapping it up on this time frame. What's that telling us? They're gapping up in the overbought condition on the 10-minute chart. When is it time to start taking profits? Well, it looked like earlier they had actually opened this up. Why is it that you could start taking profits after your first signs of a sell signal? Let me see whether that was on the 5-minute chart. No, they must have stopped trading it. But you could see where you were getting to the point where when you're trading, the first time I have a strong move like this, the first sell signal that shows up, I close out the position. Because what's happening from that point? Bulls are in control, bulls are in control, bulls are in control. Bears came in. Now what's happening? Now you've got bulls and bears. And more than likely that trend is over for the day. I can't remember if that... I guess that was... So here's kind of the same scenario if we were shorting soybeans today. Downtrend, downtrend, downtrend. And then your first big day, I told you that's where the bulls are stepping in, and then you can see what the trajectory was after that. This doesn't move very much. So if you can get that first big move, and you see that first reversal signal, you go ahead and close it out. All right, now let's get back to something. Oh, I'm going to go back here for a little bit. This is that day, this day right, or this session, just because I can remember this the best. This was Tesla a few months back at the beginning of the year. Uptrend, uptrend, uptrend. What kept us in this? Never closed below the T line. What did it start showing here? They started gapping it up. What did it do here? Look how far away you are from the T line. Very simple rule. The further away you move from the T line, the higher the probability it's going to come back and test it. So when it's up here, what was the two pieces of information that told us that we wanted to get ready to take profits? One, they gapped it up in an overbought condition. Two, look how far away they are from the T-line. What's human nature do? Somebody's going to start taking profits. That's when we would flip to our 10-minute chart, and the 10-minute chart started showing selling. So we had people in the options room get out up here and not give back all that profit. Even on that day, it gave back quite a few hundred points. So these are just simple parameters of what happens in human nature that we can utilize because the Japanese rice traders have graphically shown us what's happening. No wonder it's not moving. Is the 5-minute chart the lowest time frame? Well, sometimes I go to the 1-minute chart. Let me see. I traded cattle today. Let me see if I can remember. You can see the daily chart on cattle, J-hook pattern. That implied I want to be trading this on a daily time frame, or I wanted to be trading positive based upon my daily chart. So if I flip to my 10-minute chart, you can see right in this time frame that it was starting back up. And so maybe if I'm thinking about buying here, and it looks like it's setting up, then I flip to the 5-minute. I'm going to see if I can. The 5-minute chart looks like it's still trading positive, which means my 10-minute chart is trading positive. And is this still trading positive going into this area? Then I'll flip down to the 1-minute chart. I won't even pull it. If I pull up the 1-minute chart, there's no telling what will be. Yeah, I don't know where the 1-minute chart would correlate with that. So anyways, if I'm getting ready to buy and my 10-minute chart looks good, I'll flip to the 5-minute chart. And then if I'm ready to pull the trigger, I'll flip to the 1-minute chart and say, are they still taking it up right as I'm buying, or should I wait a minute or two if they're pulling it back? Okay, so the T-line, again, keeps our emotions out of our decision making. We've got people that are long FedEx. This is what we call the 45 degree. Broke out, now it's a 45 degree. So how long do we hold on to this? As long as it doesn't close below the T-line. Now, we could have taken profits up here because look how far away we moved from the T-line, and logic says, where do you think it's going to move to? Back to the T-line. Raymond, you had before what? Why do you call it a 45 degree? Because usually what happens on a breakout like this, it moves in what I'd call a 45 degree. 45 degree can be this or this, just kind of moves in a steady uptrend. Oh, no sound. Is that a J-hook? Not really. It could be, but I'd consider it more that you're just in a steady uptrend. So right now we're sitting in a market condition where this one stayed up stronger than I thought. Notice when it sold off yesterday where it bounced. Now, I say noticed where it bounced. The reason I say that is you'll find that there's a very strong correlation to pullbacks supporting right on the T-line. The reason that makes that significant is, Jim, can you tell Raymond to hit the red X, log out, and log back in? I don't think it's missing 2 days, is it? Last 2 days missing from chart? It is. You're right. But notice the same scenario. They haven't been able to close it below the T-line. Now, did kind of a doji spinning top. So we go to our doji rule. The price is usually going to move in the direction how they open after a doji. If it opens positive, they're still taking it up. If it opens lower, you close it out immediately. Oh, put a stop loss. Anytime I'm in a long position that's steadily moving up, I'll usually put my stop below the T-line. Or if I'm now up in the overbought area, I'll put my stop at the previous day's low. Because logic says if there's enough pressure to bring it down through that low, the bears have taken control. So, Sammy, we can do a whole training we usually do in the members area, a whole training session on stop losses. There's a very different and very logical method for putting on stop losses that work very effectively when using the graphics, the candlesticks. My fears happen when I'm taking a loss even though it is not dropped below the T-line. So I sell out almost always in the wrong decision most of the time. Jace, it will help, yes. Because that means one of two things. That maybe you're buying here instead of recognizing that this was the buy down here. The T-line is on the daily chart confirms if we should be in the trade going long or short. The use of the 5, 10, and 15-minute chart respectively to confirm entry and exits, yes. Until you get to where you've moved excessively away from the T-line, or that you've hit a level that looks like you've hit a resistance level. That let's draw this line. If I've hit that resistance level, then I'll flip to my 10-minute chart and say, what are they doing here at this resistance? When are members only sessions? We have our members session Monday night, which is these type of sessions, but more directed toward our existing positions. And then either Tuesday or Wednesday night, we would do special sessions like how to scan for the best trades, where to set stop losses, how to perfect your entry and exit strategies, how to identify a breakout setup, things that are specialized. And we usually try to do those once a week. So define excessively away from the T-line. When you can see that it's not trading in the same nature of the T-line, when you've started to move a little bit too far, especially when you're up here in the overbought area. It's not a percentage, it's just a visual analysis. Have they moved too far away from the T-line? If you're in a positive trade and see a sell signal, do you sell all your position or just partial? It depends on whether the sell signal is well up in the overbought condition. For example, I might close out half the position right here, because the next day we don't know whether it's going to open positive, negative, or sideways. So if I've got a good profit, what are my prospects, or what are my probabilities? It could go higher, it could go lower, so I'm going to take off half the position because I've already got a good profit. If it continues higher, I'm still making money in a higher risk area with half of the position. If it turns around, I close out the other half position. So I will take off half a position. The green line is the 3T, the 3 exponential moving average, which works effectively in two ways. If you see a buy signal and the 3T line comes up through the T line, that's just to add a little fluff that you're in a positive direction. Or the further away you get from the T line, the 3T line becomes more effective. Do those long wicks at the top of the candle indicate selling pressure? Which one were you referring to? And they do, yes. That's where your shooting star on Roku. Yes. So if I had been long, we recommended a Roku, but I didn't get into this one. If I'd been long, I would have gone to my 10-minute chart. If I missed it up there and saw it backing off from that level and stochastic starting to curl, I would have put my stop at the open. Because logic says if it comes back down through the open, the sellers have taken control, especially in an overbought condition. Everything that is built into candlestick signals is just pure common sense. When I was learning candlesticks by myself, there was so many times I would say to myself, yeah, that makes sense. And now all we're doing is seeing that common sense that's built into graphics. When do you close immediately versus waiting for the end of the day? If we know there is which ones were they? If I have a hanging man in the overbought condition, very simple rule. If it opens lower, you close out the position, even though it's not at the T line. If it opens lower, where do you think our first logical target is? The T line. So remember, the signal is the number one criteria. The T line is just a very powerful confirming indicator. Yes, I saw that, Jerry, that they had something to do with another, for the vaccine. So during the trading day, you would have stayed short. But now it's going to open up somewhere in here. You probably want to take a look to cover the short trade. Okay, let's see. You use stochastics for entry on entry date time frames, such as your 10-minute time short, in addition to the daily, and what are the time settings again for both? Ed, I don't know what that said. The stochastics tell me, yes, if I'm getting ready to go short, in this case, seeing the stochastics turn over, let me see if I can find something. Yes, you use the stochastics. The candlestick charts are what they call fractal, which means everything that you use as indicators on the daily chart work just the same way on the 10-minute, the 1-minute, or the weekly, whatever you're using. Okay, all right. If we have a bearish engulfing signal, would you close it then and there, even if it's above the T-line? Yes. I'm trying to think of which ones were in that condition. Well, that actually closed below the T-line. That one, I would have probably have closed at least half. I would have closed the position just because you could see everything turning against you. What was my worst case scenario? I didn't know whether this was going to open positive, negative, or sideways, but it was telling me the sellers are starting to take control. Even though we closed right on the T-line, I could always buy back in. I don't use RSI because stochastics work. But that's the nice thing about candlestick charts. The most important factors are the signals and patterns. Everything else is a confirming indicator. I use stochastics. If you want to use RSI, just use whatever correlates. Well, I use 1233 on my stochastics because one night many decades ago, the 1455 that was recommended was a little bit slow for swing trading. So I sat for an hour and I tweaked 1431, 1243, 1252, 1422, all sorts of things. And I came up with 1233. And 1233 seemed to correlate pretty close to when things topped out and when things bottomed out. Now, we don't trade stochastics. We just want to know where the stochastics are when we see a buy or sell signal. Remember, we're looking for the buy signal to occur when stochastics are down toward the oversold area. Obviously, a candlestick buy signal in the overbought area doesn't mean very much. As a matter of fact, a bullish signal in the overbought area, sometimes, especially on a bullish engulfing, tells you that's the last gasp. Tupperware looks like it could be a short on lower trading tomorrow. Penn looks like it could be a short on lower trading tomorrow because of the doji rule. Kim, hold on to your individual ones until I tell Jim to do the double line, and everybody, whoops, we're running way behind schedule. Just do one tonight. Do you believe Roku will open higher on Friday and I bounce? I have no idea. I have no idea. Stochastics heading down. You have to wait to see what it does there. Explain again where to put the stop. Victor, yeah, that's a whole session. If we're in an uptrend in the overbought area, I'll put the stop at the previous day's open. If I'm riding right along the T-line, I'll put the stop below the T-line. So, but that's a 45-minute training. Lots of piercing signals in gold stocks. Let's take a gander. Yeah, gold today came up a little bit, but not dramatic. No. They have a red line and a blue line. That's how people that trade stochastics use stochastics. I just want to see where the stochastics are. How often does a stock bounce off the T-line when not in the overbought or oversold area? Exceedingly often. Trying to think of which ones we looked at today. And again, when it bounces up off the T-line, you got to remember, to us, that becomes a very bullish indication. And the reason for that is the T-line acts like a Fibonacci characteristic or a Fibonacci nature. It's a natural support and resistance level of human nature. And the fact that nobody has it on their charts means when it bounces off that level, it is bouncing off a natural support resistance level of human nature. We just happen to recognize that and use it on our charts. Well, I can do this. GACZ. This is gold. Doesn't seem to be doing very much. It's down $7 after hours. And this is silver. Still not doing very much. It might be bottoming, but not with any great enthusiasm yet. Can you tell me why I did not, because you didn't know your candlestick signals of that? And the end of March was this is why we put out a very strong buy at the end of March, because this is one of the strong candlestick reversal signals. First of all, you've got a morning star signal, a big down day, a day of indecision. The third candle opens positive and closes more than halfway up this candle. That's a morning star signal. Then it was followed by a doji sandwich, which is a bullish candle, a doji, and then we know the doji rule, which is if it's going to move in the direction of how they open after the doji, it opened positive and traded positive. We knew that this day right here was going to be the same magnitude as this day right here. Thus, the doji sandwiched in between. We call this the McMuffin because it's a morning star signal followed by a doji sandwich, or your morning sandwich. It's your McMuffin, and it's a very strong reversal. If you'll go back and look at the YouTubes on that date, you'll see that I said buy aggressively because that's one of your strongest reversal signals. Overstock, I'm sure all of them are the same. Or same. Oh man, what did you just do? I don't know what I just did. Well, for crying out loud. Hope I didn't goof up all the charts. I did. Oh, that's because I must have gone to a monthly. I don't know what I just did, but I've screwed up the charts. What did I just hit? I goofed up something. What did I hit? What did I just do? I can't even figure this out. I was going the wrong way, maybe. There we go. Okay. Whew. We could have been here all night trying to figure this out. Okay. So anyways, right now, while we're looking at the Dow, we don't have anything that's telling us we've got any change of investor sentiment. We've got a bearish J-hook pattern. Wave 1, wave 3 could take us down to the 200. Trying to think of what else we had that would have. I don't have any stock picks or ones that I've looked at because I haven't had time yet, but the markets are in a state where they're oversold. I wouldn't be shorting things right now. Maybe things like this one, because this is Momo, because you've got a bearish J-hook pattern. Notice where the failure was, kind of a slow curve, gap down, hit the support level, and then fail the T-line. If this opens lower tomorrow on a bearish doji sandwich, we pretty much have a setup, which is your bearish doji sandwich, which that day and this day will be the same. What's that tell us about the support level? It's not there. That tells us we're going into wave 3. We also know that if we shorted and it was going in this direction, it shouldn't come back up through this level, because if it did, it's pretty much telling us that this is a support level. Okay. Well, let's see. It's a potential. Again, it's sitting right here on the 200. It needs to open lower. Are the futures up? All right. Let's take a gander. Futures right now, the YMs are up 133 points. All right. A doji sandwich is, I don't know if we've had, a doji sandwich is a bullish candle. Anybody remember a doji sandwich? If I go back, there are signals, and there's the 12 major signals. There's about 6 or 8 patterns, and then there's combinations. This is a morning star signal, one of the 12 major signals. A 3-day pattern, a down day, a day of indecision, and a third day closing more than halfway up. The Japanese race traders call that a morning star signal. The doji sandwich is a bullish candle, then a doji. And we have a very simple doji rule, which is the price will usually move in the direction of how they open after a doji. So when it opens positive, we knew it was going to trade positive. And we knew a doji sandwich setup would mean that the magnitude of this candle would probably be the same as this candle right here. Thus, your little doji is sandwiched in between. So the McMuffin is a combination of your morning star signal followed by a doji sandwich, or essentially your morning sandwich, which is your McMuffin. But it's still below the T-line. No, are you talking about this one, TN? This is the T-line, the black line. When do you buy in this case? I was probably buying on this day because you had a morning star signal that closed right at the T-line. And if it opens positive, what's it telling us? It's confirming our morning star signal. Okay. All right, Tesla. Tesla opened at the 50 and closed here. Now, it's not a signal, but it is an indication that they are probably using the 50 as support. So the worst case scenario would be that if it opened positive, this isn't a reversal signal, but more than likely, positive trading tomorrow would bounce it back up to the T-line. Then you see what it does at that level. Would you have held DJIA when it took the dip after the buy signal? When was that? Back in the, yes, because it was above the T-line. If you're referring to the McMuffin time frame. Oh, right here? No, we closed out positions. But then we bought positions back here because now not only did you have a Morningstar signal, a pullback, now you had a J-hook pattern. You can see the little J-hook, meaning that would probably make the 50-day moving average your next target. And from there, we were predominantly long. Okay, back to Tesla. Oh. Wedge on Tesla? You could, yes. There's your bottom, there's your top. So the first thing it has to do is get through the T-line, then it has to get through the top of that wedge. Is volume a big deal using candlestick patterns? I see some good signals with very low volume that end up having good price moves. Chris, my trading universe already builds in volume. I'm only looking at stocks that trade on average 200,000 shares a day or greater. Now, obviously, if I've got a $20,000 trade and a stock is $5, if I'm going to buy 4,000 shares, that's pretty hefty, or a fairly big percentage of a 200,000 shares traded during the day. But if I'm going to buy stock in a $50 stock that trades 150,000 shares, I'm not as concerned, because if I'm buying 400 shares, with options I want to go much further because of the open interest on a lot of stocks that have, I usually try to look for stocks with 1 million shares or more to trade options, especially on the spreads. So the Qs, just like the NASDAQ, kind of hovering in here. All right, Jim, let's go ahead and do the double line. And in 3.8 seconds, do the second double line. CABT, I bought in the afternoon. It was way up. What should I do tomorrow? It better open positive tomorrow to stay in it. So here would have been another example of going to your, that's the 1 minute chart. No wonder I can't recognize anything. Here's a very high percentage play. If you see a big, strong price move, the first selling, close it out. Because that's where the bulls and the bears are finally come into contact with each other. So tomorrow you definitely want to see this one open positive. If it opens lower, I'd close it out. OMI is you see a stock like OMI trade. You watch to see what it does tomorrow. You know there's a new investor sentiment. You look for a 45-degree off of here. So if I was buying tomorrow, I'd have my game plan. I'd be expecting this type of move, and I wouldn't want to see it trade back below today's open. Zillow, you can stay long because you can see the one basic indicator right now. They haven't been able to close this below the T-line. I don't know whether I'd be buying it here, but if you like buying it, I'd just be buying it on positive trading and use the T-line as your stop. This one you can get ready to buy, the Natural Gas Fund. You've got kind of a kicker signal here. So you want to be buying, you can be buying this one. Obviously, you want to see it get up through the 200-day moving average. Snap. This one, if it opens lower tomorrow, you close it out. The fact that you are now back below the T-line tells you unless they open this positive and trade positive, you don't want to be in it anymore. Work, nothing exciting here. You can be buying it on positive trading. It just needs to see a lot of strength with it consolidating right along the T-line. eBay, that's a little bit more compelling. You can buy this one. You just watch to see what happens if it gets up to the 50-day moving average. And NTRA, this one has a little bit of a trend kicker. So you got your bullish engulfing off the 34. I'd be a buyer of this one on positive trading. Cooper, is this Cooper Tire or is this Campbell Soup? Oh, I love Campbell Soup. You can buy this one. It's almost a cradle pattern. You can see how you had your big headboard, your flat bed, and now the footboard. That usually means they're ready to start taking this one back up. CWH, stay short. Big bearish engulfing. You stay short as long as this stays below the T-line. Matador, if you're short, you can stay short. If you're thinking of going short, I'd use today's low. If it comes down through there, giving you a bearish doji sandwich, breaking this level, now you've got kind of a bearish J-hook pattern. Open interest is like the total volume of contracts out there. Volume is the amount of contracts that traded during that specific time frame or that day. So if there's only 43 open interest, that means there's not a lot of trading. If there's 4,000 contracts, that means you're got pretty good probabilities of being able to get in and out when you want to. That's a good-looking chart. Bearish. Today was not a buy signal. It was just an up day and a downtrend. So if this opens lower, you've got kind of a dumpling top, which is the opposite of your fry pan bottom. Notice how they gap down. So if I was shorting this one, I'd short it if it comes back down through today's open. SID, same scenario. I doubt if you can be short this one, but I wouldn't want to be long. Yes, Campbell Soup was, a cradle. Yes, it is a cradle. Apple didn't do anything that showed a reversal. I wouldn't be long or short Apple just because there's no direction to it. If you're short, you can stay short. And you could probably even be shorting it if it came back down through today's open. But I wouldn't be a buyer just yet. And if I wasn't short, I wouldn't be putting on a short position here. 10X, that one you should be out of. There's nothing on that chart that would make you want to stay in it. CBAT at 245 after hours. Oh, up here? Okay. Yeah, there was a few of them. Was this one of them? Yeah, another one like that spiked up. Another one that you would have traded off your 10-minute chart. When it spiked up, the first selling, you would have taken profits because that's, again, where they hit the bears. FLGT, is at the 10-minute chart. Still soggy. I would probably trade it on the basis that if this opened lower tomorrow, you close it out. If it opens positive, you're still in this fry pan bottom. This one you can get ready to buy. You can see the little slow curve. You can see the bobble breakout and the doji. If it opens positive, you can be buying immediately and just put your stop at the 50. INO, up after hours in sympathy. Okay. All right. Thank you, Jay. EXAS, big breakout. Another one that if you happen to be in it, if it opens lower, you take profits, and then you can always buy it back when it comes up through the close. If it opens lower, the probabilities are there's profit taking, and it won't head back up until it comes back up through that level. If you could, I don't know whether you would, let's see, that's a, OMI that's a New York listed stock. You wouldn't have known it was gapping up. Now, NASDAQ stocks, you can see the bid and ask before the open. I don't think you can on the New York stocks. So it's not trying to find out which ones are going to gap up like that. It's knowing what to do with those after they've gapped up. PNC Bank, you stay short, but you're in the oversold area. Your safety stop is at today's high. It shouldn't come back up through that level. NVTA, you stay long as this stays up above the T line. Nothing wrong there. And Yelp, you stay short after it's kind of broken this support level. You stay short, but you're in the oversold area. Keep your safety stop at today's high. And Daku, nothing. I would have closed it out today. I wouldn't be long or short. I don't know why that's on there. Still there. That's just not a good looking chart. First of all, it doesn't have a trend right now, and secondly, it's not going anywhere. Does free market trading? Not really. I don't trade free market because you may have a stock that trades 6 million shares during the day, and it might be moving around on 20,000 shares after hour. I want to see what everybody's doing. Trading is like driving. You have to take all the, that's right. That one has a trend kicker. You can buy on positive trading. Another little slow curve. How often do you monitor your trade? Well, I've got them up on my watch list all day long, so I can watch to see what they're doing. If you're some place where you have to go to work, you set up your trading strategy so that if you come home from work, you can see what to do the next day. Oh no, I missed Campbell's soup today and was alerted that it would reverse. All right, okay. Tesla is not a buy because it's still below the T line. So just one very simple rule, that you aren't in an uptrend until you see a buy signal and a close above the T line. If you just use that basic rule, you'll improve your, not only your trading, but your keep from being whipsawed in and out of positions. The only time Tesla was oversold in the last year was at the bottom. That's right. Goog, another one that if I was short, I'd be watching because it looks like they're trying to support here. If this opened positive tomorrow and I was short, the probabilities are going against you being short. I'd cover short, but I wouldn't be going long until you see a buy signal and a close back up above the T line. Shill got banged today, but notice where they bottomed it, right smack dab on the 50. Now, you should have been out of this yesterday. What was yesterday? Yesterday. Because when it closes below the T line, the probabilities of being an uptrend diminish dramatically. If OMI, you go to your 10-minute chart and see what it's doing. What are your moving averages? The blue line is the 50-day simple. The red line is the 200-day simple. The reason you have those on your charts is because every major money manager around the world uses those moving averages. We're just seeing what their decisions are at those moving averages. The 34 EMA works effectively well. And then the T line is the 8 exponential moving average. The 3T line is the 3 exponential moving average. ILMN. This one, if you've been short, where do most people sell? They panic sell at the bottom. That's what a gap down tells you in the oversold area. If you're short and you see a gap down, you start getting ready to cover. If you're buying, the first target is to see what it does at the 200-day moving average. I probably wouldn't be an aggressive buyer until it does come up through the 200. This one you shouldn't be in until it gets back up above the T line. Pre-market are interesting where massive volume comes in pre-market relative. If there's a big volume, usually it's news. I don't have any volume on these charts. Oh, for gaps, yeah, you could use volume then, I guess. Yeah, you need a system that not only, who is it, Will Rogers said, trading the market is easy. You buy stocks that go up. If they don't go up, you don't buy them. Costco, did they report? It won't show up here. Did they report after hours today? And Oracle, I guess Oracle is in the process of buying, what is it, TikTok or whatever. Nothing on Oracle. There's nothing there. Okay. What is the purpose? It acts as a little confirming indicator. When you see a buy signal and a close above the T line, you get a little bit added confirmation if the 3T line can come up through the T line. Then, also, if the further away you move from the T line, the more it becomes an effective indicator. When and why do you use the 3T line as opposed to the T line? Okay, Jace into that. Costco is down, all right. Okay, everybody. Yeah, nothing in this market right now that would make us want to buy with any great urgency. You're in the oversold area. And today was a good illustration that even though the Dow was up hefty for a while, the sellers are still in control as long as you're below the T line. So a way to get rid of your emotions is using the confirming indicator or keeping your emotions out of your trading. Those are the things that we're going to go through on Saturday. So that's kind of, for those that have said, oh, I can analyze the charts, but I'm doing something wrong. I'm either getting in too late or getting out too early, or I'm letting my emotions get in the way. Everything I've done is to kill my emotions because being the worst investor in the world, I had to figure out ways to get them out of my trading. So with that, we'll see everybody bright and early in the chat rooms tomorrow. We'll see you then.